I believe in my soul something bigger is in store for gold. I truly do. And all of that gold and silver is coming back to the United States. We are now a net importer because we realize the only way to inspire confidence and maybe front run the BRICS. You know, he's having meetings with Xi Jinping and Putin. Is he discussing this? Is he saying, let's just massively revalue gold? It will benefit you guys. It'll devalue the dollar. That's what he wants. It'll devalue the dollar against gold. Gold goes to the moon. Every thousand or $4,000 increase in the price of gold gives $1 trillion free and clear to the Treasury general account.
Gold and silver are being brought back to the U.S., making the country a net importer as it seeks to boost confidence and stay ahead of BRICS nations. There is speculation that high-level discussions with leaders like Xi Jinping and Putin could significantly involve a plan to revalue gold. A surge in gold prices would weaken the dollar while benefiting major global players and adding trillions to the U.S. Treasury. Meanwhile, 16 tons of gold have recently left GLD, with analysts attributing it to profit-taking and a shift toward assets like Nvidia and Bitcoin. AndySchectman, the president and CEO of Miles Franklin, discusses that since November, the United States has become a net importer of gold, with J.P. Morgan set to deliver $4 billion worth of gold to COMEX for the February contract, one of the most significant shipments ever. Additionally, over 12.5 million ounces of gold and 40 to 45 million ounces of silver have moved from London to U.S. vaults. The delays in London's gold settlements, now taking 6 to 8 weeks instead of the standard T+1, suggest growing stress in the paper gold system. The February COMEX contract has seen a record-breaking 59,296 contracts stand for delivery, surpassing previous highs, raising questions about whether these movements are tied to tariffs or a more significant financial strategy. AndySchectman highlights in recent months, J.P. Morgan has also taken control of GLD, the largest gold ETF, joining BlackRock in controlling the world's largest silver trust, SLV. Given J.P. Morgan's history of metals market manipulation, this shift raises concerns about future government intervention. Rather than outright confiscating gold, authorities could shut down ETFs under existing prospectus rights, preventing investors from accessing their holdings while claiming no legal violations. This move would allow the government to take control of vast gold and silver reserves without directly seizing private ownership, signaling a more profound transformation in the global financial system. Before diving into Andy's video clips, subscribe and hit the notification bell so you don't miss out on more content like this. Thanks for watching and enjoy the video.
The foundation. How many people know that since November, what happened in November? Oh yeah, it was the election, right? Since November, the United States has become a net importer of gold. Not since the inauguration, but since November. Are people in the know understanding what's coming? So since November, we've become a net importer of gold. J.P. Morgan is set to deliver $4 billion in gold to the COMEX for the February contract, one of the largest shipments ever. Now, who's got that kind of bread? Now, Blythe Masters used to run their trading desk, and there are videos out there of her saying J.P. Morgan does not buy for a house account, they buy for clients. What kind of clients got $4 billion to drop on gold? Could it be the Federal Reserve or the U.S. government? One of the largest shipments ever. Since November, 12.5 million ounces of gold and over 40 to 45 million ounces of silver have moved from the London vaults to the U.S. vaults because everyone is saying it's tariffs. To me, it appears that the Federal Reserve is accumulating physical gold and silver for a bigger reason, maybe part of a sovereign wealth fund strategy, maybe something bigger. Now, we talk about London, and we look at London, and they are supposed to be T+1 settlement. They're now T+6 to 8 weeks. That's a default. Give me my gold in 1 day. No, it's going to be 6 to 8 weeks. What do you mean 6 to 8 weeks? It's T+1. Sorry, we're backed up. BS, they're backed up. Something's bigger happening right here in front of us. Get this. When you talk about signs of stress in the paper gold system, the February contract on COMEX has seen deliveries, stand for delivery, of 59,296 contracts. That is by far the largest delivery ever at COMEX. The previous record was in the middle of the QE to infinity nausea in June 2020. It was 47,132. This is 12,167 contracts more than the largest ever. That's 5,929,600 ounces. Try multiplying that times 2,900 and your calculator will go E. It's too big for your calculator to tell you what the number is. 2,747 silver contracts in February, or 427 tons, 13,735,000 ounces, all coming to New York because of the tariff threat. Or is it the tariff threat? Could it be a ruse, perhaps? Along those same lines, somewhere in the neighborhood of November, I always bitched about the fact that JP Morgan paid a $920 million fine for manipulating the metals market and somehow still got to be the custodian of the world's largest silver trust, SLV, they and BlackRock, amongst other ETFs that they own in London and around the world, gold and silver ETFs. It was HSBC Bank that always controlled GLD. But guess somewhere in the last few months who just took control of GLD? Oh my goodness, it's none other than JP Morgan, the fox guarding the hen house. So you have JP Morgan and BlackRock now in custody of the largest silver trust in the world and one of the largest gold stockpiles in the world, amongst other ETFs. And what have I always said when people say, do you think gold will be confiscated? I said, no, I think they'll take the ETFs because we can't take possession of the ETFs. The commercial banks can. I'm going to talk about that in 1 second.
AndySchectman points out that the current movements in the gold market signal something far more significant than just Trump's proposed tariffs. Major financial players, including the most well-informed traders and central banks, rapidly accumulate and repatriate gold, shifting away from paper-based manipulation schemes. Unlike before, more entities now stand for physical delivery, fundamentally changing how the gold market operates. While the public remains unaware mainly, institutional actions suggest a significant financial shift is underway. This could be part of a broader strategy to revalue gold, pegging it to treasuries to restore confidence in the financial system. Trump may be using tariff threats to bring gold into the U.S. before making a major monetary move. With central banks worldwide calling for changes, the possibility of issuing stablecoins backed by gold is becoming more realistic. If forced to make a call, this is a massive financial restructuring rather than a trade policy shift. Andy suggests that if gold becomes a key part of a monetary reset, history suggests silver will follow, even if not immediately. As the poor man's gold, silver remains more affordable and accessible, making it likely to surge as gold becomes more expensive and strategic rather than just an industrial metal. Despite market manipulation and short positions, the ongoing repatriation of silver and rising demand suggest a shift is underway. Moreover, silver is historically undervalued, with a far greater upside potential than risk. While it may not move in lockstep with gold, it could slingshot upward as gold takes off. Market pressures, naked short positions, and increasing demand for physical delivery could accelerate silver's revaluation. With supply constraints and Western market suppression weakening, silver's price will likely rise significantly alongside gold. Now, let's jump into the interview.
This is what we're going to do, but call it the Trump threat? I believe it is. And I will go on record as saying I believe this is the beginning of something massive for the price of gold. And it's stupid of me to do that. I know that. I don't normally put any type of definitives on anything, but all I can tell you is that I've never seen anything even remotely close to this, not even by 100 yards, as to what we're seeing right now in real time. And then when you take a step back and look at what he's doing and uncovering and exposing, I don't know, man. It just seems to me like this is bigger than just the Trump tariffs, that this is signaling something that we should all pay really close attention to. And the greatest contrarian indicator of it all is that the people in this country are asleep at the switch, as the most well-funded and well-informed traders on the planet are moving in hyperdrive to not only accumulate it, but to bring it home, like the 40 banks that took it home from the Bank of England and the New York Fed. They're all repatriating and accumulating. And the paper scheme, which always has allowed the banks to manipulate because no one ever stood for delivery, it's now changing. And all of these countries, as I've said on your show, are motivated, coordinated, sophisticated, and we know what you're doing, and we'll stand for delivery. Thank you. So now I think Trump is doing the exact same thing. This is not about Trump tariffs. He will not put tariffs on silver. It is in a massive deficit in this country. 80% of the silver we need for industry, we import. He won't do it. Gold, maybe, or maybe it's just a threat so he can suck everything here before he says we're not going to do it, because now we own so much of it and we're going to revalue it because it's held in the revaluation account and it is the only other tier one asset. And all the central bankers are calling for the same damn thing. And let's peg it to the treasuries to inspire confidence and issue stable coins off of it. Is that what's happening? If I had a gun to my head done again, I would say, yes, that is what is happening. So I'm going to go out on a limb for the second time in my career and say, this ain't the Trump tariffs. This is something bigger, much, much bigger. History would say it is. It could be, look, if gold truly does take part in a monetary renaissance that way, it may be distorted, but I can't imagine gold going way, way higher and silver not at least coming along for the ride, simply out of the fact that it's the poor man's gold and gold will be too expensive and hard to come by. But in my mind, gold is becoming strategic far more than industrial. And you're seeing a lot of silver is not gold. You're seeing a lot of silver come home here too in the repatriation. He will not put tariffs on silver. I believe he will not. It's too hard. It's too much in deficit. It would kill the industrial side of things. But history says silver is the most undervalued asset on the planet. It's the most asymmetrical thing I've ever seen, where the risk is so far lower than the reward potential that I still think it's in play and maybe even in spades. So just may not happen the way that we think. I think gold could run hard and then silver will slingshot to catch up, but may not play out the way we exactly think. But I think, yeah, absolutely, I would still hang on to that, and with anticipation of indeed capitalizing on what truly is the very fact it's coming out of the ground at 7-1, and you have the Western suppression, which seems to be breaking. You have this position on SLV, the naked shorts that are scrambling. You have on the LBMA, 300 million ounce float that's trading 2.9 billion ounces per day. That doesn't work. That math doesn't work because those are all contracts that should stand for delivery. And if you see a rush to stand for delivery and what amounts to defaulting, it'll only exacerbate and accelerate the final outcome. And just the geological ratio between the two should come into focus. So yeah, I mean, even if gold goes to the moon, silver will find a way to catch up.
The ongoing movements in gold and silver markets indicate a significant financial shift beyond traditional trade policies. The global monetary landscape is rapidly evolving with increasing repatriation, record-breaking delivery demands, and potential revaluation strategies. Whether this leads to a gold-backed financial system, stablecoin issuance, or a broader restructuring, it is clear that precious metals are becoming central to economic strategy once again. Investors should closely monitor these developments as they may present challenges and opportunities soon. How might a potential revaluation of gold impact global financial markets and currency stability? If ETFs were shut down to control gold and silver reserves, what alternatives would investors have to protect their wealth? Share your thoughts on Andy's suggestions in the comments below. If you enjoyed this video, don't forget to hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. See you next time.